There are total three important types of liquidities in the forex market, where the liquidity moves from the liquidity point to the liquidity point. In this video, I will explain totally three types of liquidities in the forex market. This is inducement liquidity, structural liquidity, transactional liquidity. So let's dive deep into the video by explaining each of liquidities. The basic structure moves like this. So higher highs, higher lows, higher highs, higher lows for the uptrend. So this is what every people in the YouTube, Instagram teach the structure in this way, right? But this is completely fake. This structure is fake. The structure is created to induce the liquidity. Liquidity. This is where liquidity orders, liquidity lies. We do completely opposite to the smart money. We are trading the hidden layer of the smart money. So how to identify where the liquidity is in the forex market? We should use our common sense where the majority of the people have their stop losses, right? So what is meant by inducement liquidity? Right, I will explain here. When the market is moving in the uptrend, use the common sense where majority of the people have their stop losses. This is where majority of the people buy, and they will have their buy order here, their stop loss here, because this is the order block. So we know that the liquidity is here, the liquidity is resting here. So it is more probably, if the liquidity is taken, then we can expect the reaction up to here. Now this becomes the target liquidity. The market hunts the liquidity and then gives the real move. The real move don't come from the order block or something. The real move comes from the liquidity. If the liquidity is taken, the market will move. If you backtest this, you can see number of examples. The market moves from liquidity pool to the liquidity pool because it's the game changer. Liquidity is the game changer for everybody, I know. So there are three types of liquidities. First is inducement liquidity. I have explained here. If the market is moving in uptrend and give false break of the structure, now this false break of the structure is our entry, and we enter here with 2 to 3 stop loss and target the next liquidity, right? And next one is structural liquidity. So what's meant by structural liquidity? You all know and you are all familiar about the smart money concepts. This is how the structure of the market moves, right? So in this structure there will be a substructure. You all know there will be a substructure. Let us use this yellow to be clear. So this will be the structural liquidity for the continuation. This will be the structural liquidity for the continuation. The topmost inducement of the point of interest is the structural inducement. If this was taken out, we can directly sell up to this liquidity because this is the structural inducement and this is the real inducement. This is the structural inducement. The real inducement is high probable than the structural inducement because this is taking the internal structure. The real inducement have high amount of liquidity here. The liquidity is more when compared to this high, right? So the real move happens from here. So we can sell from here. This is what the structural liquidity. For the same thing, it will be for the buys. The market moves like this and same thing for the buys. Let's use this. Yeah. So when the market is moving uptrend, the last structure to the extreme point is the structural liquidity. When this liquidity is taken out, now we can say that many of the buyers got stopped out, and the liquidity got grabbed, then the move got ready at the specific timing we wait for, and then we can buy the market. This is called the structural liquidity. And what is meant by the third thing, transactional liquidity? I will explain what's the transactional liquidity. Many people will say structure is the king, liquidity is the king, but both smart money and liquidity works. We should know at what time what works. This is the structure. This is the break of the structure. Sometimes it will work. I'm not saying the smart money will never work. Everything is probability in the marketplace. Small reminder, guys, if anybody wanna join the August bootcamp where I explain the exact steps which I use it to get 200k funded using the same liquidity strategy I am teaching you, and to teach you with the exact guide which I follow the checklist, I will leave a link in the description. You can join it. There are only 2 members I am accepting, but the members who I accept should be have at least 2 years knowledge in the smart money concepts. Otherwise, they don't understand whatever it is. This is the advanced bootcamp. Okay, back into the video. This is the transactional liquidity. Transactional liquidity means following the structure. After the high is taken out, you should sell. After the high is taken out in the upper trend, you should sell, because this is also liquidity. This is called a transactional liquidity. For every liquidity, even this liquidity is taken out, there will be some more. Even this liquidity is taken out, there will be some more, because we know that every high and low in the marketplace is a form of some type of liquidity. So these are the main 3 types of liquidity. One is giving fake OB, fake break of the structure. This is called the inducement liquidity. And another one is structural liquidity, which means that taking the top substructure of the move. And the transactional liquidity means following the trend. We can sell from the order block from the above because the liquidity got taken out, right? So for the bonus, I will exactly show you the trade I took today in the gold using the transactional liquidity, right? If you see in the gold, the market changed the uptrend. The market is moving in the uptrend, break of the structure, where the market shifted the sentiment here, right? The market shifted the sentiment here, break of the structure, break of the structure, break of the structure. So why I took the sell here? Because simply just because of the transactional liquidity. Transactional liquidity. Because the market is moving in the uptrend. If you see in the higher time frame also, the market is moving in the uptrend, right? So it is more likely to sell because it's a transactional liquidity. The same concept I explained here. The market is trending like this, we can sell. If there is an order block here, I exactly found the order block here. This is called the breaker block. When the smart money OB is taken out with a huge speed and aggression, it will be used for a good amount of reaction. So this is where I entered the trade. This is the first tap liquidation. I call it as, usually my team members know the entry type I use. This is the first tap liquidation, I call it as. And after the engulfing candle, I entered the trade. So what's my TP? This liquidity is my exact TP. This is the inducement liquidity in the 1 minute time frame. If you see, I entered the liquidity. I take my full volume at the liquidity 1:3, easy. If you wanna learn this type of strategy, feel free to DM me on my Instagram, or I will leave the link in the description. I will show you the exact step-by-step approach how I got funded 200k using this same strategy. Peace, guys. Have a good day. If you have any doubts, leave in the comment section.